We've got a problem. I'm an entrepreneur. I think a lot of you in the room here today are also entrepreneurs. The world economy is in turmoil, and it has been for quite a few years. Yet, we also have a dilemma in that it's never been easier or cheaper to start a business. And that's because, obviously, we now have the internet, and we have the things that come with the internet that make starting a business easier and cheaper. So we have social media, which enables you to promote your business in a very low-cost way and reach, have a huge reach without spending huge amounts of money. We have software as a service, which enables entrepreneurs to be able to use tools and pieces of software that previously they have had to spend a lot of money on in terms of capital expenditure. So now accounting and CRM services can be done on a relatively small monthly fee. And we have crowdsourcing, which you guys have probably seen over the last couple of days, which means that you can get the crowd involved in both making your business run and accessing services such as kind of things like logo design, again, in a much cheaper way than ever before. And we have fantastic entrepreneurs globally. I mean, when I started Crowdcube, when I had the idea for Crowdcube, it was quite UK focused. And I was looking at all the fantastic entrepreneurs we have in the UK, but having done a fair amount of traveling since starting Crowdcube, I realized that there's fantastic entrepreneurs all over the world, and I'm sure Singapore is no different. But the problem that we have is that whilst it's easier and cheaper to start a business, it's actually never been more difficult to raise money for a business. Entrepreneurs find it very difficult to find startup and early stage capital. And that's a problem that we really need to fix. And being kind of naive, I thought that I might be able to fix that problem. And being an entrepreneur myself, having experienced that problem, I really wanted to find a solution. So the way that I thought I'd approach it was to look at the status quo, to look at the historic ways that we've raised capital in the past. So venture capital is one obvious way. VCs, great if you can find a VC that can invest in your company, but the reality is that most startups won't get VC investment. Relatively few and far between that those kind of businesses can find that capital. There's not many VCs out there, and they're very selective about who they choose and who they invest in. Debt finance, loans from the banks these days, I don't know about Singapore, but in the UK, you've got no chance of getting money from the bank. I mean, it just doesn't happen. They're very cautious, they're very risk averse, very unlikely to happen. Business angels, I think, is a great model. My previous businesses that I've had, and this is a third startup I've had myself now, I've used business angels, and it's a great way of finding finance, and they can contribute a lot to your business as well. But there's an imbalance, there's a supply and demand problem there, where there's far more entrepreneurs out there looking for finance than there are business angels able to give that finance. So there's just not enough to go around. So what occurred to me was, well, there's this kind of criteria that you have to be a business angel, that you need to be either wealthy or somehow sophisticated. Well, what if we could change that? So I looked at the way that people invest as business angels, and they invest typically large amounts of money, between $10,000 and $100,000. And it occurred to me, well, what if there's a way to have, say, 5,000 angels investing $10? So really lower the barrier. What if basically anybody could become a business angel, and you turn the model on its head then, and you find a new source of capital? So this is the new model. We need new models to address this problem that we have with entrepreneurs. As entrepreneurs, we can't rely on these institutions like banks and VCs to help us fund our businesses. We need to be empowered to be able to raise the money ourselves and have some control over the process. We need to disrupt and disintermediate these incumbent players. And it makes a lot of sense for us to rely on each other, to rely on the people, and to use people power to do that. And if we're relying on people power, then we end up with a crowd. And it's the power of the crowd that we're really here to talk about today, and how we can make the crowd fund our businesses and solve this problem that we have. So, I'm guessing you guys probably pretty much know what crowdfunding is, but let me just recap, and Paul's been over this already. So basically, it's very, very simple. It's a way of getting lots of people to invest relatively small amounts of money to raise a much larger sum of money for a particular purpose. And the purpose that I'm talking about here today is business finance. So it's equity finance. And you might think, as Paul explained, that this has gone on for hundreds of years, possibly longer, that people have clubbed together to raise money for particular projects. But we now have the internet and we now have social media, and with that we have the ability to do this on a scale that's never been achieved before, reaching a global audience and doing it in a much more efficient and faster way than it's ever been done before. So let me tell you a little bit about Crowdcube, which was the result of this kind of process that I went through to try and find out how we could solve this problem. So Crowdcube is a crowdfunding platform. It reaches two different types of people. So first of all, we wanted to solve this problem for entrepreneurs who are looking to raise money for their businesses. But secondly, and very importantly, we're trying to reach what we call micro-investors. So we're trying to let everybody become an investor in a company. And I use the word micro. Anybody can invest from just as little as £10 in a business on Crowdcube, and for that you get shares in that company. This is really important because in the past, people like me, just normal people on the street, have never had the chance to invest in exciting startup companies before. You've always had to become an accredited or a high net worth individual before you can actually get access to do that. So let me tell you a little bit about the platform and how we do it, how we do crowdfunding for equity. So this is our platform. We've been going for just over 2 years now. So as I say, basically on our site, a business can approach us and decide that they want to raise money on Crowdcube. We'll take them through a vetting process. We'll make sure that they're the kind of company that's going to be successful on crowdfunding, that they have a business plan and some financial forecast so they can present themselves in a credible way to our investor base, and take them through the process of getting the pitch live on Crowdcube. Once they're live, any of our investors can come along and browse through the various pitches on Crowdcube and decide which ones they might want to invest their money into. To become an investor on Crowdcube is a pretty straightforward process. You go through a sign-up process, you become a member, and then once you're a member, you get to see all the details of all the great businesses we have on the site. So let me show you one of these businesses. This is a company called the Thoughtful Bread Company. They recently raised £55,000. So if you look in the top right-hand corner, how do I make this work? There we go. So up here, this is the amount of money they were looking for, £55,000, and they're offering 20% equity in their business. At this point in time, when I took the snapshot, they'd raised £30,000 and they'd had 20 investors in the business, and they'd raised 69% of their target, and you can see a little graph there showing the progress they'd made. To actually make an investment is really straightforward. It's an e-commerce type process. Type in the amount of money you want to invest there, click invest now, and it'll take you through a process where you'll agree to invest a certain amount of money, and then when the pitch closes, it needs to raise its 100% target, we'll then take that money from your bank account and distribute the money to the investee company. And of course, as an investor, you get a share certificate, you get entered on the company's share register, and in the UK we have an organisation called Companies House which tracks all the investors for a company, and you get registered there as well. So you become, even if you invest £10, you become a proper shareholder in that company. What else do we have? So we have, this is our basic data about the company here. We have an updates tab where the entrepreneur can post relatively new updates about the business, about how they're progressing whilst their pitch is live. Critically, we also have a question and answers discussion forum. So this is a way for investors to interact with investee companies, to ask the questions that you might want to know about before you invest. So it's a very busy forum. There's a lot going on there. The investee companies do get asked a lot of tricky questions. Whether they like it or not, this is part of the process in raising funds. And here we have a video. So we do expect all of our companies to have a video. Generally, we ask them to do a piece to camera. So this is being an online platform, this is the only chance that investors get to see the whites of the eyes of the investee company and to see the passion and the belief of the entrepreneurs who are looking to raise the money. So further down here we have some images of the company. So these guys are a baking company, as you probably guessed. They're looking to raise some money to get from the stall that they have at the moment to have their own premises. And further down here, we've got the documents. So I talked before about how we do focus quite a lot on the documents. Whichever way you raise money, I think you're going to need to have a business plan, you're going to need to have some kind of financial forecast. And just because this is an online model, it doesn't mean to say that you don't need those basic things. And if anybody's going to invest substantial amounts of money into your business, they're still going to require you to have that kind of proof and that kind of plan before they put any money in. So financial snapshot, full financials, business plan, and some historic accounts there as well. So let me tell you a little bit about the differences with crowdfunding versus more conventional fundraising and what we've learned about kind of what works, what the benefits are, both for investors and for the investee company. So for an entrepreneur, well, clearly this is a new way to raise finance, and we looked at the historic ways of raising finance. And what we're trying to do here, as I say, is give people an alternative, give entrepreneurs options, new ways of raising finance. We're not trying to replace the existing ways, and if you can find money in other ways, we'd encourage you to do that. You know, we're here to help entrepreneurs. For Crowdcube, this gives you UK-wide investor reach. More traditional models, particular kind of business angel networks, were very geographically centred, so particular regions of the UK had angel networks. This is a UK-wide way of raising money, and as regulations open up, we're hoping to make this a global way of raising money. It's very easy to promote. So again, to try and get your message out there, you can use social media, you can use email, you can use offline methods. The companies that have been successful are the ones that have thought most about how they promote their opportunity and get the word out there to as many people. It's very cost effective. We are all about success, our platform, so we don't charge entrepreneurs any money unless they're successful. We're entrepreneurs ourselves, and we don't like this kind of concept of having to pay people money to raise money for you, and then if they don't raise the money, you still have to pay them anyway. Well, for us, if we're successful in raising the money for you, we'll charge you 5% of the money raised. If we're not successful, we don't charge you a penny. Now, as well as the obvious benefits of raising money on our platform, there's these extra benefits of getting a marketing effect. So we get tens of thousands of visitors to Crowdcube every month. Now, whilst they are potential investors, they're also, crucially, potential customers as well. So if you've got particularly a B2C retail consumer type product, whether that's a service or a physical product, these people are going to potentially be purchasers of that product. So it's a great way of getting your brand and your service and your product known to thousands of people, even if you don't raise the money. But more importantly, you could have the great combination of having an investor who's also a customer. And not only will they continue to purchase your product because they're an investor in it and they've got a reason to buy it, but they'll tell all their friends and family and everybody that they know about it, and they'll become evangelists and advocates about your brand and your product too. And finally, whether you like it or not, as I said, you're going to get crowd feedback. Again, being in front of thousands of people, you're going to get people telling you what they think of you, what they think of your products, what they think of your company, good and bad. And if you can take some of that as constructive criticism, then hopefully you can perhaps rework some of your products or your service. You can use it as kind of market research to find out what people think of it and make some modifications. So it's a really important aspect of crowdfunding to get that crowd feedback. One thing I haven't mentioned there as well, the other thing that we've noticed more and more now is that people talk about business angel networks or business angels as a way to get money, but also get value add, get expertise in your business and contacts too. Well, that still applies to crowdfunding, and the majority of the companies that are successful through Crowdcube find fantastic investors who add extra value. They either have some knowledge or contacts or expertise they can provide. And having been through the process ourselves, we now have extra board members, extra advisors within Crowdcube from fantastic places in industry that are bringing us a whole load of benefits just because they invested in us, and we get that for free. So benefits for the investor, well, obviously the kind of most obvious thing that people would expect from making an investment is to get a financial return. But our surveys of the investors that we've got on our platform, and we've got 36,000 now, it's not all about the financial return. They're doing it, quite often they're doing it for the fun of it. So they're putting in money and they're hoping to get a financial return, but they're doing it because they're enjoying it and they're supporting the economy and supporting small businesses. So they're becoming what we describe as an armchair dragon. They're sat at home at their kitchen table or in their armchairs with their laptops or their iPads, and they're just having fun looking through the different investment opportunities they've got and investing small amounts of money and building themselves a portfolio of investments. Also, key, which is what Paul talked about, is supporting your friends and family. This is a way to formalize the more informal, traditional friends and family round when you get your business right off the ground and you call upon your friends and family to put in relatively small amounts of money. But those, as I say, those rounds are normally quite informal, and quite often you'll forget to issue the shares to your brother or whatever. And this is a way to make sure that all that is done properly, and then build on top of that, because the crowd come in knowing that you've got your friends and family already on board. And as an outside investor, if you can look at a company who've got their friends and family invested in already, you know that they're going to do the best they can by their friends and family, and thus by outside investors too. Participation is really important. So by particularly the consumer type products, retail type products, you can invest in a company that's got a product in a supermarket, then you can walk into the supermarket and pick up that product and know that you helped get that product there. So you feel involved, you feel like you're part of the company, and you're doing something to help that company make a success. There's a real tangible link there. The last two things are basically this new way of investing. So this enables you to lower and spread your risk. So if we looked at the way that angel investors invest, typically tens of thousands of dollars or pounds, you can invest £10 here. So rather than having to put in, I don't know, let's say £50,000 into one business, you can take that £50,000 and you can put £10,000 into 5 businesses, or 5,000 into 10, and you can build a portfolio of different types of investment, which means you're spreading and lowering your risk. And that's never really been possible in this type of investment before. And last but not least, of course, this is a really simple and quick and easy way to invest. It's an online platform, 24/7 access. You can ask the questions you need to online. It's really quick and simple to make an investment. So in terms of kind of what success we've had as a company, and I'd like to think we're one of the pioneers in equity crowdfunding. When we launched Crowdcube, to be honest, we weren't entirely sure whether it was going to work or not. And it took us a few months before we funded our first business. And that kind of proved the concept and proved the model. And we've gone from success to success since then. And we've now raised over £9 million in the last 2 years for over 50 businesses. We've got over 36,000 members registered on Crowdcube now, and it's growing about 2,000 or so a month. In terms of the types of investment made through the platform, we initially imagined, having seen the likes of Kickstarter and who were in the very early stages when we started Crowdcube, we thought people would be investing, I don't know, £50, £100, and the business plan we did for ourselves in the early days was based around thousands and thousands of people investing very, very small amounts of money. But the average investment we've had through the site so far has been £2,500. So people are putting in substantial amounts of money, taking this very seriously. It's not a throwaway amount of money that people are putting in here. And that's demonstrated by the largest single amount that's been invested through the platform, which was £250,000 by one individual, which was actually into Crowdcube itself as part of our round. But when that guy invested £250,000, I'd never spoken to him on the telephone, I'd never emailed with him, I'd never met the guy, and he put £250,000 into us. Pretty amazing. And I've only got a minute left, I'll quickly wrap up. So we're authorised by the FCA, which used to be the FSA in the UK, the local regulator. One of a very few crowdfunding equity platforms that are regulated in the world. And the biggest deal we've done is £1.5 million, which was for ourselves, which we raised a few weeks ago now. So the actual numbers on that were we raised £500,000 in 24 hours, which was from our existing investor base. And then when we opened it up to the general public, we raised £1 million in 24 hours, which was amazing to be involved in. It was such good fun. And I think that's probably the fastest equity crowdfunding raise ever. So this is a few of the businesses that that we've funded. And if any of you are coming to the workshop tomorrow, I'm going to go into some of some detail on some of these businesses as part of the case studies we'll be doing tomorrow. So to wrap up, hopefully you can I've demonstrated that crowdfunding for equity is a viable method for small and medium-sized businesses, startup and early-stage businesses to raise finance. It's going to fix the problem that we have. It's going to contribute to fixing this problem that we have with access to finance, which really, really needs to be solved. And I'm really looking forward to seeing equity crowdfunding grow around the world in the next year to 2 years. And I think you'll see a huge difference and a huge growth in the area globally in the next few years. Thank you very much.